My analysis of these two markets may surprise you, so stay tuned. This is Adam, and what we're looking at is a market that really doesn't look like it's gone anywhere. If you look at the ranges here, it's kind of like stuck in these ranges, and obviously buying it here and selling it here leads to be a pretty good idea. But what's the big picture? Most traders look at markets on too close a time window. We're looking back on the last 6 or 7 months of gold. Well, if you just did that, you think, well, this market hasn't really done anything that's so spectacular. But if we take everything off the screen and we look at how well this market has gone and look at the moves we're seeing, huge moves up here, and it looks as though we're getting ready for another move higher. And let me explain to you why I think that and why it's important to look at the big picture. Looking at minute charts, 5-minute charts, maybe that works if you're a day trader. But the reality is most day traders don't make the kind of money that position traders or swing traders make. That's where the real money is in the marketplace. So let me just take this off the screen and let's scope this in a little bit further. And as you can see, we've had a phenomenal move up here, and we've sort of gone into this little kind of move like that. And this is usually indicative of a market that's going to go still higher. Let me show you the pattern I see and why all of our indicators are saying there's a giant footprint, which means the smart money is buying gold to push it higher. So let's take this off the screen for a second, just there. And I'm going to look at our giant footprints in each time window. So click here for the giant footprints, and we'll scope this out so we see a little more, and we'll make this into a bar chart. See how easy it is just to toggle, and we'll still go in even closer. This is a daily. As you can see, 650.50 positive. On the weekly, 636.50 positive. On the monthly, 648.70 positive. On the quarterly, and this is the long term, 661 positive. Even though the market's lower right now, it's still saying the market's positive, and that's what you have to look at with these different time windows. So I'm going to go back to the daily. I'm going to take the indicators off, and I want to scope this out just a little bit to show you what I'm looking at and why I think this market's getting ready to move still higher. So scope out one more time, and then we're pretty good to go. Okay, so I'm going to put my little pencil back on here, and you can see what I consider to be a very strong base in this market. Now, getting over this level here, which is, I drew that pretty poorly, but there, and we are over it, indicates that we have a move that's going to go from around the 560 level right here to where we are here, about the 650 level. So $90 from this point on. So if you're looking at 650, $90 tacked on to 650 takes you up to where? 740, which takes you into new high ground for gold. So we're looking at a 720 to 740 an ounce target for gold. Market looks very strong. All cylinders are firing. We expect this market to go higher. That's what we look at, the big picture. The big picture in this market is indicating that we're going to go higher. Just look at how powerful this market has been over since basically 1999. It's had a huge run up. We've had some hiccups. We've gone down, no question about it. This is a huge move down. But look, the market's beginning to come back. This is indicative of another move up because this is the big third wave. We had the correction. We've had the ABC correction in the Fibonacci numbers, which I've talked about in previous movies. It looks as though we're going to see gold go higher. I'll show you something that just may surprise you in a market that's well known. It's had a lot of publicity, but it's not going the way the experts think it's going to go. It's going the way that the people that know what's going to happen are pushing it. So stay tuned. Hi, we're back, and what we're looking at is a contract of crude oil, March crude oil to be specific, 07, and as you can see, it looks, hey, this is looking pretty good. It looks like it's going higher. Everyone's talking it's going higher. It's record cold weather in the Northeast and the Midwest, and wow, everything points to this market going high, yet look what's been happening in just the last few days. We've had tremendous positive news for this market, and look what's happened. For the last 3 days, open higher, close lower, open higher, close lower, open higher, trading lower. We're still trading on the 7th, so it's still an active session. It's higher for the day, but it's still, every time the market opens, it goes lower. The key level here in the March contract, where everyone's going to be watching, one of the key levels where everyone's going to be watching is right here, this level 58.40. If we go below 58.40, then I think it's a good bet. You can short this market and see it resume its downward trend. Now, looking at the trend now, it looks, whoa, this is looking pretty good. But if you scope this out a little bit, and that's the important thing, I'll take this off the screen. If we take this out and look at this market, what's it really done? It's just had a rally in a bear market, and this tremendous amount of weight above this market. I'm just going to a line chart. Tremendous amount of weight or work above this market. You're talking from basically here to here, and we're talking from May of 05 to basically December of 06. All of this work, this is a huge top. You're not going to turn around on a dime like we're seeing here and have a little rally up here thinking you're going to take this out. It's not going to happen. This market's going to have another leg down, and it's going to, this is the first, well, first of all, this is the top. This is a major top. We've talked about this in our previous videos. You've broken through this line. It's a head and shoulders top. The target range for this is somewhere in the $40 to $45 range, somewhere down here. That's where we're looking for this market to go. Now, once this has failed, which we think it will, we'll see this market start to move down and come under pressure. Once the warm weather comes back, remember we've had record cold weather in the Northeast, the Midwest, and the Mid-Atlantic, and yet the market's really failed to take out the 60 level. Every time it opens higher, it gets beaten down. Someone's selling this market, and I think everyone is buying this market. I think they're going to make a big mistake, and they're going to pay for it, because I think this market can have a move, almost a $15, $20 move down from here, which is about $15,000 to $20,000 a contract on the NYMEX. So that's what we're looking for. We're looking for this market to go lower. Let's see what that giant footprint say, because I could say, what if I'm wrong? So let's just take this off the screen, and let's step everything through. This is our daily. I'm going to scope this in again. Well, the daily clearly sees at 53.23. The market's at 59. It's going higher. So it's quite a nice move up, but that's not necessarily the way you want to look to trade. Let's go to the weekly. The weekly is also positive, 58.45. Not a bad sign. But the longer term monthly is short from 71.90, and the quarterly is short from, is also short at 60.20. So I think we're seeing this market moving lower. So here it is for a quarter. It opened right here for the quarter, and look where it's trading now. It's still trading lower. It's still trading lower than last quarter. It's still trading lower than the quarter before that, and the quarter before that. This is a downtrend. At best, we have a trading range. At the very best, which means we'll see the oil go basically up and down. But I'm betting that the longer-term trend, as witnessed by the monthly and quarterly charts, are going to come into play and are actually going to force this market to push still lower from the downward trend that we have seen. These unfulfilled objectives that we have around right here, 42, be fulfilled. This is a major top in crude oil. It's not going to be taken out with this little squirmy rally here for the last month. It just isn't going to happen. You're not going to take all of this work out in 1 month. So I hope you enjoyed a little mini lesson on crude oil and on gold. Tale of two markets. One's headed much higher, the other one's headed much lower. So stay tuned. I have a little message for you. Hi, this is Adam with just one final message. You should always use money management stops, diversify into non-correlated markets, and listen to what the market's saying and not all the hype. That way, you will be successful. Thanks for watching.